Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at RCAT Holdings.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. For the longest time, RCAT was, seen as this small cap drone company, often struggling with capital intensity. But that whole story, it just fundamentally changed in the fall of 2025.
It really did. And it was all driven by one massive capital event.
That capital event is the absolute starting point. If you want to understand this company's new trajectory, you have to start there.
We're talking about a public offering in September 2025, right? It generated, about $172 million.
Approximately $172.5 million in gross proceeds. You just can't overstate how significant that is, especially relative to where the company was valued before.
It's a truly decisive financial move. I mean, before this, you'd look at their filings and see that cautionary language.
The infamous going concern warnings.
Exactly, which is basically a signal of severe risk because of liquidity issues.
And that risk is now completely gone, wiped off the table.
The transformation is it's staggering. Post-raise, the company reported having over $206 million in cash and receivables.
They didn't just plug a hole, they built a financial fortress.
Right. And this cash cushion gives them, over 3 years of operational runway?
Over 3 years, yeah. Which means management can stop worrying about quarterly financing and just focus purely on scaling up.
Scaling those defense contracts and developing new products.
And crucially, that cash isn't just sitting there. Management was very explicit that this was a raise for a multi-year growth plan, not just to cover near-term burn.
So where's it going?
The net proceeds are earmarked. Some for working capital and scaling manufacturing, but perhaps the most interesting part is the significant investment into their new unmanned surface vessel division, the USVs.
That strategy tells you they have a ton of confidence in two very different growth areas.
It does. They've got the aerial defense side, which they've already validated, and now this new maritime segment. They've shifted their risk from liquidity to execution.
And that's a signal they're ready to play in the big leagues of defense contracting.
It is. It's a high conviction bet, and now they have the chips to play. But, the money's only part of the story if the tech doesn't hold up.
Which brings us to their core moat, their defense technology.
And this is where it gets really, really interesting. The validation for their tech is just undeniable.
The main advantage is twofold, right?
Correct. First, they got Blue UAS certification. That's a huge regulatory gatekeeper for the Department of Defense. But second, and this is far more critical, they won the U.S. Army's short-range reconnaissance contract. The SRR Tranche 1.
That SRR contract win is the bedrock of their whole defense strategy, isn't it?
It absolutely is. And what makes it so important is the context. RCAT's Black Widow drone system was chosen over the prior incumbent, Skydio.
And that just doesn't happen unless your technology is demonstrably better. You have to meet some extremely specific military needs.
Precisely. This win wasn't about being cheaper. It was about capability. The Black Widow showed it had superior tech, especially in electronic warfare and modularity.
Meaning it can handle jamming in contested airspace and adapt to different payloads easily.
Yes. And that selection essentially made them a fortified defense prime contractor overnight for a program that could be worth over $100 million in total.
And once the Army chooses a platform and integrates it, the switching costs are immense. It's incredibly sticky.
It elevates RCAT way above all the general commercial drone noise.
We should also touch on the regulatory tailwind here. The National Defense Authorization Act, the NDAA.
Oh, that's a huge factor. The act puts serious restrictions on using foreign-made drones, especially from China, in any U.S. military or government operations.
So it basically creates this massive protected market for U.S.-based manufacturers like RCAT.
It absolutely does. It funnels a ton of defense spending right towards their products, like the Black Widow and their F-FANG FPV precision strike drone. It's a powerful advantage.
And they're not just selling one thing. They're building a whole ecosystem.
A full spectrum ecosystem. You have the Black Widow for recon, the Trishan fixed wing for longer missions, and the F-FANG for tactical strikes.
So, by offering that whole range, they increase the switching cost even more, because the DoD is buying into a family of solutions.
It's a much stronger foothold than just selling individual components. They become a critical system provider.
Okay, let's pivot hard to the numbers, because the growth here is, it's exponential. This is where you see those contracts hitting the income statement.
Absolutely. We saw a dramatic revenue acceleration in Q3 2025. Revenue hit $9.65 million.
Which was already a 646% year-over-year increase, a clear inflection point.
But the forward guidance is even more aggressive. It's really telling. Management is guiding for Q4 2025 revenue to be somewhere between $20 and $22 million.
So if they hit the high end of that, you're looking at over 1,455% year-over-year growth.
It's exceptional demand acceleration, and it's driven almost entirely by the initial ramps of that Black Widow production contract.
Okay, but we need to balance that a bit. What about profitability?
Good question. Gross margin in Q3 was quite low, just 7%. Part of that was a necessary evil, though. They had inventory write-offs as they transitioned from the old Teal platform to the new Black Widow system.
So that's a one-time thing. But the lower margin is still something to track.
For sure. Management is guiding for improvement, though. They're aiming for 10% in Q4 and, critically, a long-term target of 20% by the end of 2026.
And that jump from 7 to 20%, that's all about execution, right? Economies of scale.
It is 100% about execution. They have to successfully transition from R&D to mass production. We're talking 5,880 Black Widow systems for the Army.
That's a classic manufacturing hurdle. If they can't hit those volumes, that 20% margin target is out the window.
Which also explains their high R&D spending. It was $6 million in Q3 alone.
Well, they have to keep innovating to maintain that lead.
Of course. They're prioritizing market share and tech superiority over short-term profit, which, for a hyper-growth defense company, is the right strategy.
Okay, let's talk about the big new bet that all that cash is funding. The unmanned surface vessel division, the USVs.
This is a major expansion beyond their core drone business, a really interesting move into the maritime domain.
The USV segment feels like a true greenfield market opportunity.
It is. Naval autonomy is growing fast because of, well, geopolitics, but it's still a much younger market than aerial systems.
It seems like smart diversification. The unit economics could be even higher than the drones.
Potentially, yes, especially if they can integrate high-value sensor and software packages, and they can cross-sell.
Right. They can leverage those existing relationships within the DoD. It's much easier to sell a USV to a customer who's already buying your drones.
Exactly, but investors need to be patient here. This is a big capital expenditure phase. The real payoff from the USV division, that's probably 2 to 3 years out.
It's a long-term strategic pillar, not a quick win.
Precisely.
So let's talk about institutional confidence. The market signals around that big raise were just overwhelmingly bullish.
They were textbook bullish. During the raise, the underwriters fully exercised their over-allotment option. They bought an extra 2.34 million shares.
And for our listeners, that means institutional demand for the stock was way higher than base offering size.
It's a powerful vote of confidence from sophisticated investors.
And then there's the signal from Lind Global Asset Management. That was even deeper, I think.
Oh, absolutely. Lind held convertible debt, and they voluntarily waived their anti-dilution rights during the equity raise.
Why is that so critical?
Well, a convertible debt holder is a very savvy financial player. By waiving anti-dilution, they willingly accepted having their potential stake diluted in the short term.
They wouldn't do that unless they were incredibly bullish on the long-term value.
Exactly. They believe the $172 million cash infusion will create so much value that it'll far outweigh the short-term dilution cost. It's a huge endorsement of the strategy.
But what about the technical picture, the chart?
The momentum is strong. The stock's trading above its 50-day moving average, which is a good short-term sign. And more importantly, it recently formed a golden cross pattern in Q3.
The golden cross. That's a classic technical signal.
It is. It's when the 50-day moving average crosses above the 200-day. It basically means short-term momentum is overpowering the long-term trend, and historically, it often comes before a multi-month rally.
So the market is confirming the fundamental story.
It seems to be. And institutional ownership has surged to nearly 38% of the float. The big money is accumulating shares.
Of course, no investment is a sure thing. So despite the cash and the contracts, the number one challenge has to be execution risk.
Absolutely, 100%. RCAT has to successfully go from being an R&D shop to a true mass manufacturer.
Scaling up to produce nearly 6,000 drone systems for the Army is a massive logistical challenge. Failure there is the biggest threat.
And it's a dual execution risk, because they also have to get commercial traction in the brand new USV division. If they can't land big contracts there, that capital deployment becomes, well, value destructive.
We also can't just ignore the dilution from that September raise.
You can't. It was necessary, but it created significant dilution potential. It has to be offset by that hyperspeed revenue growth we talked about. Those huge numbers have to materialize.
So with those risks in mind, what are the key catalysts we should be watching over the next, say, 3 to 6 months?
The immediate one is the Q4 2025 earnings report. That's expected around mid-January 2026.
And they have to confirm that aggressive $20 to $22 million revenue guidance.
They must. A miss there would suggest immediate problems with the production ramp, and investors will want to see proof of improving gross margins, moving toward that 10% mark.
What's next?
Next, we need to see confirmation on the SRR production kickoff, a formal announcement. We need to see the initial delivery schedule for the Black Widow systems to the Army. That proves they've solved the manufacturing puzzle.
And then there's the big speculative catalyst, the SRR Tranche 2 contract.
The T2 contract potential, yes. Rumors are very strong that RCAT is on the shortlist for that. It's an even bigger multi-year program, and a decision is expected in Q1 2026. A win there would be massive for forward revenue.
And finally, we should be watching for news from the USV division.
For sure. With all that capital deployed, we should expect to see initial product announcements, maybe some tech demos, or even some early customer wins in the maritime space.
So RCAT Holdings has pulled off this huge financial pivot. They're now a cash-rich defense contractor with validated tech and this bold bet on the maritime sector.
And the next 6 months are all about proving they can execute. Can they handle the manufacturing scale and hit those aggressive growth targets?
So I guess the big question for 2026 is, if RCAT successfully captures that full SRR production ramp and establishes a real revenue-generating foothold in the USV market, how quickly will its valuation change to reflect that it's no longer just a small-cap drone player?
That's the billion-dollar question. How quickly will the market see it as a diversified, multimodal defense prime contractor?
If you found this analysis useful, please make sure to subscribe, like, and comment below to keep supporting the show. We'll be tracking RCAT Holdings closely in the coming months.